Investing your money wisely is key to securing your financial future, but finding low-risk options can be challenging. If you're new to investing or prefer to minimize risk, there are several strategies that can help grow your wealth safely. From high-yield savings accounts to dividend-paying stocks and government bonds, there are low-risk investments that allow you to protect your principal while still earning a return. In this guide, we'll explore 10 effective and safe ways to invest your money, offering you the opportunity to increase your savings with minimal risk and maximum peace of mind. In this video, we will talk about Top 10 ways to invest money with low risk. So make sure to watch the full video. 1. High-yield savings accounts. A high-yield savings account is a secure and low-risk option for growing your savings while maintaining easy access to your money. Unlike traditional savings accounts, high-yield accounts offer a significantly higher interest rate, allowing your money to grow at a faster rate over time. These accounts are insured by the FDIC, Federal Deposit Insurance Corporation, meaning your funds are protected up to a certain limit. While the returns are modest compared to other investment options, the liquidity and security make them an ideal choice for those seeking minimal risk and quick access to their funds. 2. Certificates of Deposit, CDs. A certificate of deposit, CD, is a low-risk investment option where you deposit money with a bank or credit union for a fixed period, typically ranging from a few months to several years. In return, you receive a guaranteed interest rate, which is generally higher than that of a regular savings account. CDs are FDIC insured, making them a safe place for your money. However, the downside is that you cannot access your funds without penalty until the maturity date. For conservative investors looking for guaranteed returns without market exposure, CDs are a solid choice. 3. Government bonds. Government bonds are one of the safest investment options available. Issued by national governments, such as U.S. Treasury bonds, these bonds pay fixed interest over a specified period and are backed by the government's credit. They are considered low risk because of the government's ability to raise taxes and print money to meet its debt obligations. While government bonds typically offer lower returns compared to stocks, they are an excellent choice for those seeking stability and predictable income. Additionally, they can be a valuable part of a diversified portfolio, especially for conservative investors. 4. Index funds and ETFs. Index funds and exchange-traded funds, ETFs, are passive investment options that track the performance of a specific market index, such as the S&P 500. These funds are considered low risk because they provide diversification across a wide range of companies, reducing the impact of individual stock volatility. Index funds and ETFs typically have lower fees compared to actively managed funds, making them a cost-effective way to invest. They are an ideal choice for long-term investors looking for steady growth with minimal risk exposure. While the returns may not be as high as individual stocks, they offer a balanced and low-risk way to invest in the stock market. 5. Dividend-paying stocks. Dividend-paying stocks are shares in companies that regularly distribute a portion of their earnings to shareholders in the form of dividends. These stocks tend to be less volatile than non-dividend-paying stocks because they often belong to well-established companies with stable earnings. Investors who seek steady income along with potential stock appreciation find dividend stocks appealing. While not risk-free, dividend-paying stocks are generally considered a safer investment option, especially if you focus on blue-chip companies with a history of consistent dividend payouts. This can offer you both passive income and long-term capital growth. 6. Real estate investment trusts, REITs. Real estate investment trusts, REITs, allow individuals to invest in real estate properties without directly owning them. REITs are companies that own and operate income-generating real estate, such as office buildings, apartments, and shopping centers. They are required by law to distribute at least 90% of their taxable income as dividends to shareholders. REITs offer a way to diversify a portfolio by adding exposure to the real estate market without the need for large capital or property management responsibilities. While they are generally considered low risk, it's important to focus on diversified and well-managed REITs to minimize potential downsides. 7. Peer-to-peer lending. Peer-to-peer, P2P, lending platforms allow you to lend money directly to individuals or businesses in exchange for interest payments. This alternative investment option typically offers higher returns than traditional savings accounts or bonds. P2P lending can be a low-risk investment if you diversify your lending portfolio across various borrowers to spread out the risk. However, there is a risk of default, so it's essential to evaluate borrowers' creditworthiness and choose platforms with strong risk management strategies. For conservative investors, P2P lending offers an opportunity to earn passive income while maintaining a relatively low level of risk. 8. Money market funds. Money market funds are low-risk, highly liquid investments that invest in short-term debt instruments such as treasury bills, certificates of deposit, and commercial paper. These funds are designed to offer a safe place for cash and provide a modest return while maintaining principal stability. Money market funds are typically used by investors looking for a safe haven for their cash, especially in times of market volatility. Although they tend to offer lower returns than stocks or bonds, they are ideal for conservative investors who prioritize stability and easy access to their funds without the risk of losing principal. 9. Treasury Inflation Protected Securities, TIPS. Treasury Inflation Protected Securities, TIPS, are U.S. government bonds specifically designed to protect against inflation. The principal value of TIPS increases with inflation, ensuring that your investment maintains its purchasing power over time. In addition to paying interest, TIPS offer a built-in hedge against rising prices. These securities are backed by the U.S. government, making them one of the safest low-risk investments available. TIPS can be a great choice for long-term investors who want to safeguard their savings from inflation while earning a steady return over time. 10. Robo-advisors. Robo-advisors are automated investment platforms that use algorithms to create and manage a diversified portfolio based on your risk tolerance and financial goals. These platforms typically offer low fees and require minimal input from investors, making them an accessible option for beginners or those who prefer a hands-off approach. Robo-advisors often invest in low-cost index funds or ETFs, ensuring broad diversification and minimizing risk. While they do involve some market exposure, robo-advisors are designed to provide a balanced investment strategy that aligns with your risk preferences, making them a low-risk option for investors looking to grow their wealth over time. In conclusion, investing with low risk is an effective strategy for those looking to grow their wealth without exposing themselves to unnecessary financial volatility. By choosing options such as high-yield savings accounts, government bonds, or dividend-paying stocks, you can build a stable investment portfolio that offers steady returns. While no investment is entirely risk-free, these low-risk strategies provide a secure way to grow your money over time. As you continue to explore different investment options, remember that diversification is key to minimizing risk and ensuring long-term financial success. Start small, stay consistent, and watch your savings grow. What do you think of our video? Let me know in the comments section below. If you enjoyed this video, make sure to hit that like button. Also subscribe to our channel before you go. Thank you for watching.